Very much, and I wish to share my time with the permission of the House with Deputy Sean Sherlock and with Deputy Arthur Morgan.
Great.
I want to return this evening to the Honohan report in view of the outrageous way the Taoiseach, Fianna Fáil ministers and indeed a number of Fianna Fáil deputies with supplied scripts tonight have tried to abuse the report. Professor Honohan enjoys, well, one of you made a bad mistake in the script, so you need to check it out. I'll give you the advice later on. It casts seriously bad reflections on the minister. Professor Honohan enjoys an enviable and deserved reputation among his peers at home and abroad. That reputation was enhanced by the report he presented on the cause of Ireland's banking collapse, and he is entitled to have his findings treated with respect and due consideration by everyone in this House. And I was pleased when Minister Lenihan chose Professor Honohan to be Governor of the Central Bank. It was a courageous and enlightened decision, and I welcomed it immediately and publicly on behalf of the Labour Party. Yesterday, Professor Honohan expressed some scepticism on the value of a special commission of inquiry. I think that his reservations should be discussed between all of the parties in here, perhaps in a private meeting with the Governor, and I think there should be common ground thereafter on how to proceed. And I'm saying that, and I think that Minister Lenihan should give due consideration to that. The Governor enjoys confidence at the moment, but that confidence could be eroded easily if ministers act as they did yesterday and this evening to deliberately distort what he wrote last week. English is a flexible language, but yesterday the Taoiseach stretched the ordinary meaning of words beyond belief to extract vindication for his past actions and policies from sections of both reports that quite unambiguously said the exact opposite. I go back again to the section on the bank guarantee. I have read it again and again because I believe the decisions that have to be made about an exit strategy from the guarantee in a few months constitute some of the most critical decisions to be made this year, of equal significance to the budgetary decisions before December. If ministers read the Honohan report with no other motive than to claim that they were right all along and on every banking decision they made, then they have a mindset that honestly is truly frightening and dangerous for our country and for our people. On September 30th, 2008, this government gave a blanket guarantee to the major domestic players in Irish banking, including Anglo-Irish and Irish Nationwide. We in the Labour Party dissented that day from the blanket nature of the guarantee offered, though we broadly supported a policy to protect depositors, and I am on the public record and wrote to Minister Lenihan a week or two beforehand, before the guarantee, before I knew it was even coming, to suggest that to him. That's on the public record. I think Fine Gael, and I've said this, were foolish to offer unconditional consent to the government that day, and ought to have joined the Labour Party in seeking to limit the scope of the guarantee. The term I used then was not to give a blank cheque, and I think Fine Gael were foolish to offer Fianna Fáil a blank cheque in that respect. Yes, so what does Governor Honohan say about the guarantee decision in his report? Yes, he acknowledged that some level of guarantee was required. He uses the word extensive guarantee to describe what was necessary in the light of the undoubted turmoil in the international markets at the time. So far so good for beleaguered ministers. This is where they choose to gild the lily and to twist the meanings of the Governor's words to their own purposes. Now, the plain word extensive has been stretched to a wholly new meaning. Extensive in the Fianna Fáil vocabulary now means total or blanket, which the Governor himself in his report positively excludes. Extensive, yesterday the Taoiseach was barefaced in his arrogant twisting of language when he claimed the Governor's endorsement of an extensive guarantee to mean total support for the specific blanket guarantee. Read the entire section of Professor Honohan's report and you could not fail to get a very different view. This section contains far more than the issue of subordinated debt. That part of the guarantee was bad enough in itself, but as people have said, it only amounted to 12 to 14 billion, a lot of money, but nothing compared with the totality of the 440 billion. But Honohan goes much further than this and questions the nature of the given guarantee in a far more fundamental way than the question of just subordinated bonds. I want to read into the record of this House the full paragraph. The scope of the Irish guarantee was exceptionally broad. Not only did it cover all deposits, including corporate and even interbank deposits, as well as certain asset-backed bonds, covered bonds, and senior debt, it also included, as noted already, certain subordinated debt. Professor Honohan's direct quote. He then goes on to say, the inclusion of existing long-term bonds and some subordinated debt, which is part of the capital structure of a bank, is intended to act as a buffer against losses, was not necessary in order to protect the immediate liquidity situation. These investments were, in effect, as we know, locked in. Their inclusion complicated eventual loss allocation and resolution options. Arguments voiced in favour of this decision, namely that many holders of these instruments were also holders of Irish bonds and that a guarantee in respect of them would help banks raise new bonds, are open to question. After all, extending a government guarantee to non-government bonds has the effect of stressing the sovereign to the disadvantage of existing holders of government bonds. Besides, new bonds could have been guaranteed separately. The arguments for simplicity also is weakened significantly by the fact that an actual dividing line between covered and non-covered liabilities was drawn at as least an equally arbitrary point. Moreover, such instruments were held only by sophisticated investors. How can anyone with any grasp of plain English interpret these words as a wholehearted endorsement of government policy? He clearly objects to the inclusion of subordinated debt. More than that, Professor Honohan explicitly questions the wisdom of extending cover to pre-existing bonds. Certainly, it was important to guarantee new bonds from that date, but to give cover to existing bonds simply added to the level of state exposure to losses. And by the way, the government came around to that view, and the department, with the ELG scheme, which they got permission from the European Union for in more recent and later times. Ministers have asserted again and again that the Irish guarantee policy was followed by lots of countries. That is simply not true. The Irish decision to guarantee the full stock of existing debt was quite unique and reckless. Many countries certainly covered new bond issues, but not in the way Brian Cowen did, and his particular Irish solution to an Irish problem has left our taxpayers on the hook for all of Anglo losses. Who didn't hear Mike Ainsley today saying, 22 billion, goodbye lads, it's gone. That's what he told us. Now, for the Fianna Fáil people whose eyebrows were going through, the roof of whatever hair they have left, they couldn't believe it, but he repeated it 2 or 3 times. It's gone. Just face up to the fact that it's gone. 22 billion. Think in Wexford what 22 billion might do, The overhang of these losses weigh heavily on our country's capacity to source borrowings at reasonable cost. Yesterday, the NTMA has another successful bond auction, but at a price that must cause ripples of anxiety in the Department of Finance. And Paul Krugman, in an article today in the New York Times, makes exactly the same point and compares our bond rates with those of Spain, and the notion that Ireland taking this huge austerity hit when the underlying fundamentals were weakened by the guarantee in precisely the way that Honohan points out is the cause of our continuing large premium that we pay over German bond rates, because we have ended up with too much national debt as a consequence of the Fianna Fáil move. That's as simple an analysis I can make. There are none Yeah, there are none so blind as those who refuse to see in this case. There are none so blind as those who refuse to read an official paragraph in its entirety and want only to extract this or that paragraph they can twist and twist for their own purposes. It is most unfortunate that ministers are unwilling to recognise any flaws in the September 2008 guarantee. These flaws are honestly recognised by Governor Honohan. They are extremely serious and may prove to be very costly as early as this autumn, when the banks have to roll over as much as a further 74 billion or so in debt. And you see, again, we heard a little bit of phoniness today, that redeeming the sub-debt at an attractive price and then rolling it over at a higher interest rate, to be perfectly honest, one produces a book profit, but then your ongoing costs, as I'm sure the people in the pen know, are consequently much higher. I've said that Brian Cowan cannot fully come to terms with what he did. Just let me say, what did he do? When he was Minister for Finance, he refused to recognise the millionaires paying no tax, that this was something that was rooted in the property-based tax breaks, and it took him years to do anything about it. The property-based tax breaks, he talked yesterday about reining them in from 2005. In fact, when in the large print he reined them in, and then he extended them. And it was like saying, roll up, property developers. You have your last 6 months, year, last 2 years, last 3 years. And as Regling and Watson point out, and Herr Regling, that very nice German man who's now, thankfully, in control of the Stabilisation Fund, and I hope he thinks kindly of Ireland, even though he was shocked by his experiences, he said to me at the committee, and afterwards, he said, I did not realise that the Irish situation in terms of tax expenditures on property was 3 times any other example that he could find in the Eurozone. And you know, I won't say he mopped his brow, but he gave a very good Germanic impression of being utterly shocked and of never having heard the like of it before. So, you know, let's get real, folks. What else did Brian Cowan do? What else did he do? Stamp duty avoidance, section 110. Developers could avoid stamp duty at a time when young couples were paying fortunes to trade up from a first property to become second-time buyers, maybe move from a 3 to a 4-bedroomed house. What happened? Developers could use Section 110, pre-Section 110, to avoid stamp duty and rest on contracts and various other devices. Goodbody's did a report telling Brian Cowan as Minister that it was costing $250 million in the year 2005-2006. What did Brian Cowan do? Apparently, a famous developer made an approach to the Department of Finance. This has been the story been told in several newspapers. I followed it intensely at the time. What Brian Cowan did was he brought the section in to the finance bill before the general election. He then had Goodbody's do a study, and guess what? It was never implemented. I mean, that was a giving in to a vested interest by a serving Minister of Finance, which was wrong. What else did he do? I dug out a speech, or not a speech, but a discussion I had.
Time is completed.
Yeah. In November, and I'm finishing this, November 2006, I talked about the likes of Stark Mortgages peddling subprime debt. I was the first person to mention that in the House. And he basically just told me to buzz off. It was not a problem that people were knocking door to door in housing estates in my constituency and your constituency, saying if your debt is only 70,000, look, the value of your house, you can have a loan for 150, you can buy a car, go on a holiday, get a new kitchen, and up your mortgage because you can meet it. So many of those people who remortgaged are underwater. And Brian Cowan is on the record. He wouldn't even listen in November 2006 when it was specifically brought to his attention.